Donald Trump versus Kamala Harris. Election day is right around the corner for November 5th, coming up in 4 days. And so we need to answer the following two questions. A, how exactly does it affect your day trading as a whole on a day to day basis where you buy and sell on the same day? B, how exactly will it affect your swing trading from a longer term perspective? And I guess as a bonus, C, which will really tie both things together, how exactly is it going to affect your portfolio for long term investing as a whole? So for the first one, for the third one anyway, we already know this, but this is the evidence period for the S&P 500 of what it basically gives from a return perspective. No matter when you essentially bought, you typically make money because the S&P 500 generally just goes up in value and as price as a whole. The only time you would have realistically lost over dozens of years essentially is between 2000, 1928, and then it didn't get back to break even until was at 1952. Anywhere else where you bought and held longer term, you basically just held your returns, kept making more and more money. But still, how exactly does this affect your portfolio when it comes to day trading, right? With day trading and swing trading, here's some evidence based from tprice.com specifically. They essentially show you that 1 year prior, how exactly the stock market was performing, 6 months prior, how the stock market was performing as an overall, 3 months, 1 month, 1 day after, 1 month after, so on and so forth. The reason why this still answers how exactly the day trade, how exactly the swing trade, is because if the market's mostly going up, that means that you should intuitively know, hey, I'm going to be mostly looking for calls as a whole because I can make money when the market goes to the upside. And on the flip side, if you're like, okay, apparently from a data perspective, it says 1 day after, 1 month after, 6 months after, 6 months after, 9 months after, 1 year after, it goes down annualized wise, then we'll be looking for puts. This is, from a data perspective, interesting anyway, because it's basically saying every year an election happens, that the market goes down. But we'll actually see, is that true? Is T price more biased on whatever the side that they're on essentially or not? But let's check it out because at the end of the day, all we really care about is the market going up and we're looking for calls? Is the market going down and we're looking for puts? Or just overall, realistically, more selfish than that, is our account going to be going up because we're on the right side of the investing market, essentially? So our accounts can look like this. Maybe not after a year, but after a few months, depending on your account value. So if we get into it, let's go on how exactly things on election day specifically, how exactly on that specific single day the market generally performs. So we'll be looking at election day for Joe Biden, election day for Trump, election day for Barack Obama, and so on and so forth. So election day coming up is November 5th in 4 days. We don't know how exactly that's going to look until it happens. But all we can do right now is look at past evidence, past data to essentially say, okay, what happened in the past that may potentially happen in the future? Let's check this out. So, first one we can look at is November 3rd, 2020. If we go to Thinkorswim platform here, I already have it pulled up. FY, this is 2020, November 3rd, the full day. If we check this out, look at what happened. You're going to see a very interesting trend, by the way. So, the market opened up at a low of 333.17 on election day specifically. After that open, it shot up to a high after 8:32 CST to 10 o'clock to 338.25. So this is interesting. So far, our first data point for the first election day shows that things went up. You might be saying, oh, well, Mauricio went sideways. Okay, oh my God, it's horrible. I'm going to lose all my money. Well, depending on your strategy, let's say you did swing trading. If you were doing swing trading, which is holding a little bit longer term, etc., then you would have made money depending on where you bought somewhere down here. If you're doing somewhere in day trading, if you see a trend like this with day trading specifically, you would have made money with the market going up to the upside. I'm not going into the TA side of things, technical analysis side of things, but the market's going up. And let's look at, well, what did the day before do? The day before is interesting as well. This is the past 2 days. This is the day we just looked at on the 5 minute chart. Each candle is 5 minutes. This is the day before. You may be thinking, Maurice, look, it went down basically. Well, actually, it was pretty much break even. So it opened up over here at about, was that 330.22? Closed literally at same thing, 330.22, give or take. Basically, it net zero. And then it gapped up overnight from 330, as I mentioned, to 333.51. So that's interesting. So maybe this is just a random time that this happened, and this can't happen every single year, that'd be very weird and sus, to be honest. But let's check out the other days. This is November 3rd, right? Now, if we check out 2016, November 8th, let's go to this day over here. November 8th, 2016. November 8th, 2016. I had to say it twice so I don't forget. Let's look at this data. This is almost very similar. It literally opened up over here at 212.56, had a low, 212.38, and suspiciously the same trend of a massive uptick all the way up to 214.77. Keep in mind, day trading wise, you buy the same day expiration contracts as like how my strategy is. If you, this is as an example, bought here and sold here, this is by itself at least a minimum of a 10 to 15% gain. You catch any of these candles plus then some, you're up 10, 20, 30, 40, 50, 60, 100% plus, depending on how long you hold the trade with it being in an uptrend. Not that complicated. So, but this is the day, right? So on this election day specifically, it just went up. So let's check out, well, what did it do the day before, Maurice? Because this is interesting. Things can't always be as simple. So there was a massive downtrend, and then the 2 days before, because this is what we're looking at, right? Pull this up, and there we go. Open up the day before over this spot at 211.42, closed at this spot over here at 213.08. Gap down barely, and then rocking it up like nothing happened. So overall, this was an uptrend, and this was an uptrend. This was a downtrend of 4 days before the election day. But let's check out what the chart mentioned before as information for this piece here. It mentioned, let's see, 1 month prior to generally, what is this? Based on median returns, it's about a -6 of a negative return. And then 1 day after, supposedly, which we'll check out maybe in another video, it potentially shows that there's a downtrend. But keep in mind, 6 months prior, 3 months prior, and basically barely almost the 1 month, but there's mostly an uptrend. So if there's an uptrend and then 1 day after generally there's a downtrend, we have to go back and look at, before we look at the rest of this chart, let's look at, is that actually factually true? This is my, I don't want to look at that at the moment. I'll get to that later. Let's look at the daily chart here. This is the past year overall. We had, let's look at this. It said like the past month, right? So the past year as a whole, it's been going up, went down, went back up, went down a little bit. And it's been basically kind of rocketing from a visual uptrend from over here at 5.3 all the way up to 85.55. And it kind of did what it said. It said 1 month before, it's kind of downtrend. So we're like, huh, that's interesting. But again, if that data is true, then potentially maybe it's saying that the market's going to keep going down overall because we're in an election cycle at the moment. If it is, perfectly fine. If it's not, perfectly fine. Because again, you make money with the market going up and the market going down. But all we care about from a day trading perspective, which we're talking about and addressing here, is the current day of election day as a whole. And so far, it shows a bit of an uptrend, daily wise anyway, which they don't have. They have 1 month prior, 1 day after, but they don't have the day of, which is an interesting piece. And that's the question I'm really answering here. So where are we at? 2020 was what we, I believe, just looked at. Let's go back. No, 2016. Yep. 2016 was what we just looked up, had that uptrend, was very interesting. So 2012, November 6, 2012 was the next election day here. So let's go look at this and see what it says. 2012. Before I click this, let me know in the comment section below. Do you think November 6, 2012 is an uptrend or a downtrend? Let me know your answer below. Was November 6 an uptrend or a downtrend? And with that being said, if we go ahead and click go and we check out what it was an uptrend. Almost like all the past years of data are valid to make the assumption that things are going up based off of past evidence and past evidence as a whole of that almost no matter what and almost regardless of what this says, annualized or not, I mean, the market generally goes up. So with that being said, there's going to just by nature be more calls than puts where you can make money. So I don't know about you, but if that's the case from a scenario based perspective, Why not be doing more calls than puts? I make more money on calls than puts. A lot of my students in one-on-one coaching make more calls than puts because that's usually where a lot of the money is because the market goes up. And you may be thinking, well, Maurice, what about like, you know, during COVID, there was a giant down piece, and during the 2008 financial crisis, which we will talk about in just a second, there's a giant downtrend, et cetera, et cetera. Well, you know that it's a giant crisis going on. The market's falling drastically. Why would you buy calls? That's the most obvious thing ever. I'm not saying I hope and wish something catastrophic would happen again, but if it does, I'm buying puts and making a lot of money. I'll just leave it at that. So I don't care either way. I make money on each side. I'm unbiased. So it is what it is. But uptrend 2012.
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
Now, you don't need to put a comment for this, but this is a very interesting one. In 2008, on election day, which is November 4th, 2008, this is during the financial crisis where everything was just dying. Stock market was going down as a whole, right? This is what the chart looks like from 2007 all the way to 2009, just constant downtrend. And again, everyone knew. So realistically, in this scenario, if you were buying calls, don't mean to be an ass, but kind of stupid. I mean, how many how many months in a row do you need to actually see for you to be like, okay, I see in the news everything's plummeting. Everyone's going through a crisis. I'll buy calls. But here's the interesting thing. If we go to Thinkorswim, for one, just as FY, I'll just show you this real quick. If we try to go to 2008, I can't look at the data. They don't allow me to. Don't know why. It is what it is. The last time I can look is in 2010, essentially. Maybe they don't want us to just play around the market on 2008. I don't know. It is what it is. But regardless, what I could find is the returns for that specific day, which again is November 4th, 2008. Now, this is going to surprise you because it surprised the heck out of me. November 4th, 2008, excuse me, it opened at 99.06, had a high of 100.86, and it dipped down at a low of 96.71, but it closed higher at 100.41. So it opened at 99 and it closed at 100.41. So even with an entire financial crisis going on, and even with the market just falling down on election day, it still went up. So I don't know about you, but at the moment for this day, I'm a bit call biased for November 5th, 2024 coming up. But I'll tell you this. Am I going to, and am I saying for you to blindly buy calls on, where's the date? Where's the date? Where's the date? On November 5th. Am I saying to blindly buy calls? No. I'm saying this is my analysis based off of all the days we just saw. All the days look like they have a massive trend, whether it be up in this scenario or potentially down in the scenario we did not see. The data shows that potentially it may be all up. In my POV, the data essentially says that whatever happens on that day, it's a massive trend. So if it looks like it's a massive trend up, I'm buying calls. If it looks like there's a massive trend going down, I'm buying puts. I don't care at all what the market's doing. I'm making money on both sides. And that's what I believe is the answer to the day of what the market does, essentially. Keep in mind, this is a very interesting piece here because if this is the case, what T Price is saying, they're essentially saying that there will be a massive drop off, massive sell off for the next couple of months, if not year later, essentially, which would be very interesting. But again, this data is interesting in its own right. Unless I'm misinterpreting it, let me know in the comments. I'm sure maybe I have to be because again, this is generally what happens, which is called up, not down. It would be interesting if I just circled each one, I suppose. But it is what it is. So that's my analysis based off of what exactly you should be doing from a day trading perspective, which is see the information in front of you, buy a call or buy a put based off of the trade you see. And for swing trading, more shorter term, long term investing, if you will, then I still say, regardless of whatever asset you're buying, asset class as a whole, follow that trend because it should potentially be massive. And long term portfolio wise, I mean, the obvious, just literally hold. Not saying the whole stupid diamond hands thing, but it is what it is. So hopefully that helps out. Good luck on November 5th, 2024. This will be the first year in quite a long time. If it just funny enough, just goes sideways forever for like 6 hours and does nothing. But hey, if it does that, perfectly fine. Because in my mind, no trade is a good trade because I saved money. But a trending trade going massively up is a way to make money, and a trending trade going down is a massive way because I can make money too. So let's see how the fifth goes.